What's up YouTube? This is Big D for the Freedom Review Me channel. Today is October 1st, almost the 2nd. Haven't made a video for a long while. I apologize to all my subscribers and info nuts out there and truth seekers and everything else. Been swamped, buried, and busy, blessed. I'll take it with business, so I haven't had the time to devote to the videos, but we're hoping to get at least one video a week out from here on out. Change some things around. One quick comment I want to make. I made a video a little bit ago just talking about the feeling and the truth movement, the depression setting in. It seems like we're starting to climb back out of that, find our regrouping, if you will. So that's a good thing. I was a victim of that myself, and several of you guys were too. It's just depressing to hear all this bad news and not really have any good news out there, and unfortunately it continues. So anyway, that aside, I'm glad we're all starting to regroup again. This one is actually going to be titled The Bankers Push Back. About 4 or 5 months ago in May, 4 or 5 months ago and about 24 pounds ago, I made a video that said the collapse of commercial real estate is coming in fast. And I hate to say that I was right, because it has just started. And if you haven't watched that video, if you could go through mine, it kind of gives you a breakdown of what to expect or what's coming up in the near future with the resets of commercial real estate investment properties and so forth. It's starting now. Just a little background about me, because I get this question a lot. You know, what qualifies me to talk about real estate, commercial, and so forth. I bought my first investment property when I was 18, still in high school. And that was 13 years ago. I'm 31 now. So I've been doing that for 13 years. I grew up in it. My family's been doing it for 25 years. So I grew up basically swinging a hammer. I've worked at a bank for nearly 5 years, so I know the insides of banks and so forth. But here's what's going on. That aside, here's what's going on with the banks. I told you guys that the commercial resets are coming the fourth quarter of this year, and they've already started. Banks are starting to report mega losses, and it's not so much the larger banks who can hide behind their derivatives and actually shift their books around to make their numbers look a little better. It's the medium and small size banks that are starting to clamp down. You know, to back up 5 years ago, the money was loose, as we all know. Banks were lending money, but they knew that interest rates at some point had to go up. This was back when the big refi boom was happening. So they knew rates had to go up, and typically before, you were able to get a 20-year fixed locked-in rate, sometimes 25 depending on the project, for commercial property, for investment property. They said, well, we don't want to get stuck with that because the money factor is so huge in that, where you have, you know, like your house may be worth $150,000, $200,000, whatever. You know, you're talking about $2.5 million, $3, $4, $5 million complexes, and $500,000 apartment buildings, and, you know, the real money, the big money. And they didn't want to be stuck to where, you know, when the rates did go up, they wanted that opportunity to bump the rates. Well, the rates haven't gone up because, as we all know, the money supply is false, it's fake. So in order to keep liquidity in the market, they remained 0% internal lending rates on overnight limits of near zero or quarter of a point. That's what banks charge other banks. So when you hear about that on the news, that they're keeping the internal the Fed is keeping the internal interest rates at near zero, that's what banks charge other banks to loan banks overnight money. So basically, it's just an electronic switch that goes back and forth. You know, if Bank A needs $2 million to cover what they got coming in, Bank B will allow them to borrow that $2 million at that quarter of a point or nearly zero. Well, they thought that rates would be higher now, and they know now that the rates will be higher. I'm sure all of you guys have heard that, you know, the economy's doing so much better. The Dow's near 10,000, even though we lost 200 points today. We're so close. Green shoots are everywhere. We all know it's BS. So, you know, there's talk now that rates will start going up very, very shortly, despite what you're hearing on the news. I'm talking to bank presidents, bank executives, and the guys who actually know what the hell's going on. So what they're doing is, now that these loans are resetting now in the fourth quarter of this year, your maturity is up. The way a balloon payment works, for those of you that don't know, is you get a 3 or 5 year balloon, and at the end of your balloon payment, it's not an adjustable rate mortgage where your rate will go up a point or down a point or flex. Your loan is over. Your loan is done. That's it. You have to refinance your loan. So what people have to do then is they have to reapply for their mortgage for that particular investment property or commercial property. George Fatitle just made a great video. I don't know if I can link it, but check out inflation.us. Inflation US is his handle here, about how he's starting to see that fact coming across, that 30 to 50% of values are going to start slipping, and it's true, because especially in the commercial industry, where now that you have to reset, the banks are now saying, well, we don't want to lock you in, and this is happening, folks. I mean, this is happening to the smaller, medium-sized banks that can't get squeezed. They can't be upside down on these loans. So what they're doing now that your balloon is set to mature, they're not renewing the loans. Period. They're sending out demand letters to people, and for those of you who don't know what a demand letter is, that's great. For those of you who do know what that is, it's where the bank says, dear paying customer, thanks for all your payments. We no longer want to do business with you. Take your loan somewhere else, and we'll give you X amount of days to get this taken care of, or you'll be in default, and we'll start foreclosure proceedings. Well, they don't want to start foreclosure proceedings. They're trying to push you out the door. And this started about 30 days ago, that the banks really started to review their books. The fourth quarter earnings are not looking positive. So what they're doing now is they're saying, all right, John Q. homeowner, if he goes foreclosure belly up, there's a million people that can buy them. If investment properties and commercial properties go belly up, we're not going to be able to, we're going to have to retain those on our books. We won't be able to even sell them off. So that's what's starting to happen. So they're saying now, your loan is done. We don't want to renew the loan with you. We don't want to do business with you. Take your loan to another institution. Well, no one's loaning the money, because everyone's in the same boat, where they don't want to be stuck upside down in 3 to 5 years when they know rates are going up. And I'm not talking up to 7 or 8%. I'm talking 15, 18, 19% interest rates, at least, with the amount of money that they pumped into the system. Quadrupled the money supply, and the books aren't open, so it's more than that. Inflation is going to kick in within the next 18 months, and when that happens, the banks know that this is going to happen, so they don't want to be stuck upside down on these. So if they lock you in for 5 years at and let me back up here real fast, because I only got 2 minutes left. They don't care about your home loan. They typically package your home loan up and sell it off to Fannie or Freddie. So they don't even retain your house, as many of you know. They'll actually just take your loan, ship it off. It's not on their books anymore. You make your payments there. They get what's called as SRP, as a service release premium, to retain your mortgage, to act like they're your bank, even though your loan's been sold off, and they make money off of selling your loan. Now, commercial and investment properties, they actually retain on their books because they don't have anywhere to sell that. They don't want to be upside down on it. So when rates are 15% and they're charging you 6%, they're upside down 9% on the loan, and they can't cover those losses. They know that's coming, and that started now. So watch for commercial, guys. This is huge, 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 huge. And the big banks that can hide underneath their derivatives and their in-run bookkeeping skills, the medium and small banks, are the overregulated banks. They're getting their asses handed to them. So this has started 30 days ago, and I said back in May that this would happen, and this is going to happen. And for those of you who haven't watched the video, Fannie and Freddie, I believe, were around, when they went bankrupt, they were around $230 billion. We're talking $400 billion in the next 3 months of commercial that's going to reset, and we're talking $1.35 trillion in the next 12 months that's going to reset. It's going to blow anything you've seen out of the water. This is coming. This is happening. The medium and small banks are going to get gobbled up because they're going to be upside down. They know it. They're trying to push clients out the door, but no one's going to lend the money on investment in commercial property. That's what we're starting to see right now in the commercial investment market. So those of you guys who know you know, a little bit about investment properties that are trying to refi, do it now. If you have a chance, get it locked in and get as long term as possible, 5 years, 5-year balloon if you can. They're trying to squeeze it all out, and you know, it used to be where you could get a 30-year fixed rate on a 1 to 4 family unit, so long as you had under 10 finance properties. Well, now they squeezed it down to 4, so now they're saying you have to get rid of it. Commercial crash is coming. It's going to happen. Look out. It's going to be much worse than what you've seen. It started 30 days ago, and it's just beginning. Watch the fourth quarter. I've got more videos coming up on this. This is huge. This is bigger than anything you guys saw last year, and it dwarfs in comparison because your neighbor can't buy this strip mall that's down the street. Another investor can, and there's no financing. Welcome to the truth.